Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. In this update video on the covered strangle, we just finished the second round of profitable covered strangles with a really good gain, over $500 in 2 weeks, off about $3,000 in buying power using MES futures. I did a few videos in the past. If you look at the covered strangle playlist on my channel, you could see under 10K challenge how I'm setting these up and how I'm managing them from week to week. So feel free to watch those too. I'm just going to go over the trades that we did the last 2 weeks and possible strikes that I'm going to be looking for going forward. As always, like, subscribe, share this channel. Definitely appreciate all your support. And let's get right to it. All right, so here's the covered strangles that I posted on the Theta Traders Inner Circle membership. If you're interested in hearing the exact strikes that I'm doing, how I'm managing them, and how I'm closing out at profits, you can join thetatraders.com and the Inner Circle yearly or lifetime membership. So on October 30th, we started it on a Sunday, did a 5 DTE out to Friday. We bought an MES contract at 3907.25. And then we sold a in the money covered call against it at 38.50. Now, the reason why I went in the money in the first week was gives a little bit of downside protection. So if you're at 39.07 and you go down to 38.50, you have 57 points of cushion before you're still going to be making a profit on it, which 37 divided by 39.07, looking at a 1.5% cushion there. So if MES happened to go to 38.51, for instance, it'd be 39.07 minus 38.51, 56 points down, but you took in 90 points from your premium that you collected, so you'll be at a net profit there. If it goes down more than 1.4%, you could still be at a slight profit because you're taking in 90, even though the difference is only about 57 or so. So I like starting these out with a little bit in the money on the covered calls, give some cushion there. It won't be as big gains if the market jumps up, but you're still at a very good percent gain off your contracts because you're using that leverage. We also did a 3,700 put at 3.8. This is a naked put. I'm willing to get a sign at 3,700 if it gets there. So we took in 90 from the call side, 3.8 on the put side. 93.8 is our total premium collected for that first week. It has a 5 multiplier, so you took in $469 just in the first week. The delta on the put was 0.11. And as you'll see, it did go pretty close to the 3,700, but it didn't actually get exercise on the put side. So I just wrote expired on the outcome, and we were able to keep that full premium. In the second week, though, the stock price was at 37.91, and then we sold another DTE for 1 week. We sold back to 3,900 because it was taking in a decent premium, 19.25. At this point, we're just trying to lower our cost basis relatively safely. Took in 19.25 on the call side, took in 5.25 on the put side, selling another naked put, willing to get a sign at that lower price and possibly average in on the two positions. So we took in 19.25 plus 5.25, 24.5 total premium collected, times that by 5, 96.25. Then the market did shoot up quite a bit this week, and the 3,900 closed. I actually ended up closing it a little bit early on Friday. I closed it at 87, even though I sold it at 19.25. But the contract was up so much higher than 3,900, I was just going to close it out at a profit there. So total profit on these was $516. I bought the contract 3907. The break even was lowering every time to 37.94, and essentially got out of the contract Friday afternoon. I did try to play it where it was going to continue going up, so I actually got rid of the call side first, and then I kept the contract for a little bit, but I only placed a 5-point stop below it. It did happen to hit that stop, so I could have made a little bit more on this position, about $25 more, but I was still happy with $516 off $3,000. It's 516 divided by 3,000. 17% return in 2 weeks. It's really hard to not try to take that gain and possibly get more relatively safely with that stop loss. All right, next we're going to look at possible strikes for the next covered strangle. Again, you're going to need about $3,000 to implement these trades and have futures approval in your brokerage account. These are not going to necessarily be the exact strikes I do. I'm going to be looking at the trend on Sunday evening to see where my possible strikes are, but you could also see how this is a pretty good strategy to lower your cost basis on your bought contract and could significantly lower it if you get a sign on the short put. Okay, so here was the MES in the last few weeks. We had some pretty big drops, pretty big gains as well. This is when CPI came in a little lower than expected. So currently at around 39.98 and change. I'm going to be looking at the 5 DTE. I'm going to first buy that contract at the 39.98. And then we're going to look at selling a fairly close in the money call. I usually look around 0.775 delta, somewhere in that regard. So we're going to look around the 3,900 or so. And that's taking in 112.5 in premium. Obviously, this could change when the market opens. Doing this video on a Sunday morning. But let's say that we took the 3,900 call at 120, 112.5. You do 3,900 plus the 112.5. 4012.5 would essentially be your net gain. And if you compare that to the 39.98 and subtract those, you might be taking in about 15 points in premium for the week. You also have some downside protection. 3998.75 minus the 3,900 divided by the current price. You had a 2.4% cushion there, so you could drop that low and still profit on that position. So that's why I like to start these trades that way, because you have that cushion. And you can also take in about 15 in premium. 15 times 5, looking at $75 off about $3,000 account. And you can make your 2% in a week with some downside protection. You can also decide to just simply sell the 3,900, 3,905 put instead of buying the contract and selling the call. Just sell the put. Notice it's about 15 in premium as well. And then if you happen to get a sign on that, then you would do the covered strangle at that point. Save a little bit in commissions that way. The second contract going to look at selling a put on, it's going to be close to the 3,800s, maybe a little bit higher, 3,820 or so. Looking at around 0.1 delta here. Taking another 5 in premium and then get an extra $25 on that. The benefits to doing the short put as well is it lowers the average if you get assigned on it. So let's say I get assigned, first bought the contract 398.75. Also might get assigned on, say, around 3,820. Since you have two contracts, divide this by 2, and you'll be at 3,909 as your break even without even including your premiums that you collect. If you collected another about 50, 60 in premium on average of two contracts, you can lower it to around 3,850, 3,860, which will be a pretty good starting point if you're going to continue selling calls against it. So that's why I like selling the put as well as the string, as well as the covered call with the contract. So based on using this leverage to have pretty significant downside protection, earning a good return is some of the reasons why I really like these covered strangles. Had 2 successful covered strangles, made almost $1,000 in the last month using about $3,000 in buying power. And it's really good for uptrending markets, for relatively stable markets as well. If it's a downtrending market, you might have to be a little bit patient because you'll have 2 contracts and then sell covered calls against 2 contracts instead of 1. But you'll be taking in premium week after week, lowering that break even every time because you're taking in that premium that offsets when you bought your contract. And then if you wait for the eventual upturn, and usually SPY and the MES equivalents and futures will give that eventual upturn, you could get out at a pretty significant profit. So if you're interested in learning more about this strategy, I go over my thoughts and my strikes. Join that Data Traders Inner Circle. And happy trading, everybody. And see you guys on the next one.